Good day everyone, my name is Viet of Axis Partners and welcome to my weekly Forex Outlook. Today is Sunday the 12th of July 2015. Coming back from my weekend break last week, I find myself in a volatile market dominated by the situation in Greece. The trading week opened with gaps on most euro pairs. I did not take any trades last week. This week, I had one trade on the Aussie Japanese yen when this pair broke through long-term support at 90.50. We're looking at the Aussie Japanese yen 4-hour chart. I'm going to go back to the daily charts to show you the support level. 90.50. This level has held up very nicely in the past 6 months and it gave way on Wednesday. So on 4-hour chart, my favorite time frame to be monitoring on the intraday level, there was a price pullback to the 90.50 level and I saw an opportunity to go short at 90.38, looking to go with the most recent downtrend if it continued. Unfortunately, or fortunately depending on how you look at it, one of my exit conditions were triggered at the close of the next candle and the trade was closed out for I think minus 22 pip stop, which is only 1/3 of the original amount that I was prepared to risk on the trade. So definitely it saved me from taking a full loss, and this is always a plus according to my trading style. On Wednesday, I had a pending order on USD Japanese yen 4-hour chart when price hit strong support at 2060. I'll show you the setup right now. This is USD Japanese yen. On the daily chart, which is my preferred time frame to look for support and resistance, 120.60 represent a very strong support level. The setup formed when I was just about to go to sleep. So I put in an order to go long. Here's the setup right here. The order to go long was at 120.92 with an expiry time of 1 candle. Now I do this for a few reasons, one of which is to make sure that I only get in on reversals that take off quickly. The speed of the reversal is very important to me, and if it does not take place in the space of time that I had anticipated, then I'm not interested in trading it. In this case, my entry order was within 1 pip to being filled. Well, as you can see, trade would have been very profitable. Does this mean that I should change the way I trade? Definitely not. My trading plan has been crafted from many years of experience from myself and my trading partner. This is but one isolated example where it did not work in our favors. We are always reminding ourselves that in trading, statistics is the only way to make a case for change. Until we see enough evidence to support a case for change, we will continue to trade the way we have been. Yes, it is painful at times when the plan doesn't bring in the profit, but that is part of the trading career. We must be willing to endure pain in order to benefit from the market. Let's take a quick scan of the market for next week. The Aussie US dollar is the first pair that I want to look at. Now, this pair has broken below 75.50 long-term support. What I'm looking for is a pullback to this level again to enter short. This is the only currency pair that I incorporate fundamental analysis to my trading. Right now, the fundamentals for this pair favors going short. Next up is the Aussie New Zealand dollar. Let's look at the daily chart. Now, Aussie New Zealand is on support at 1.1050, and despite strong selling from 1.1400, the daily uptrend is still valid. Higher highs and higher lows since April of this year. Now, a speculative long trade on Monday's open does have its merit. However, I want to see a strong bull candle on Monday at this support level before I would consider going long. Moving to the euro, some of the euro pairs are at key support resistance level, which is my preferred location to take trades. Give you an example, euro Japanese yen on the daily chart. prices pull back to 136.90 resistance, and this would be an ideal place for me to look for opportunities to go short. However, I will wait until Tuesday to make that decision. I want to see if market opens with gaps, and I also want to give the market enough time to react to any news development in the negotiation between Greece and its creditors over this weekend. Next, let's have a look at the pound Aussie dollar. We're looking at the daily charts at the moment. Now, this pair has had a few attempts to break the 2.0860 overhead resistance. If there is a daily close above this level, I will be looking for opportunities to go long. Next would be the pound USD. This pair has had an eventful week, first breaking 1.5540 support and then pull back to this level, which could now be acting as resistance. It's worthwhile to know that the most recent fall from 1.5900 down to where it is now is still part of a larger uptrend that is still valid. This is the uptrend that I'm talking about. It started at the beginning of April. You have higher highs and higher lows, and that pattern at the moment is still technically valid. The question is, which scenario is less risky to trade? A short trade at this level or a long trade in line with the overall long-term trend? Let's wait for Monday's close and see which way the market wants to go. To wrap things up for this week, let's take a look at the news calendar to see what we have for next week. Now, we have a few high impact events for the pound, such as the yearly CPI and the unemployment claim. We also have Canadian interest rate decision and monetary policy report. We have Bank of Japan as well. They're going to have their statement on monetary policy, and Chinese quarterly GDP and industrial productions, which would have high impact on the Aussie dollar. And of course, we have the ongoing Greece situation. Looks like there will be more than enough to keep volatility high for traders next week. That's it for me for today. I wish you all a safe and profitable trading week ahead. Stay safe and remember to always manage your risk exposure to the market. Bye for now.